as in like equity prop desk trading, or anybody been doing any bank desk trading. It's a phrase that comes from bank desks. It comes from prop desks. It's the concept of held bids and held offers. And the idea is very, very straightforward. It's exactly the same as what we call absorptions, for example. Every training manual you'll get from a prop desk will have exactly the same thing, guys. Every single training manual you get from every single prop desk will say exactly the same stuff, because it's the way that they trade these things. It's exactly the way they trade these things. So when we bought the NASDAQ the last time, take a look at what the training manual says to do. Take a look at how the trade shapes up, and take a look at our idea of why the trade is a buy, and you'll see what happens. So here's the training manual for support, right? So this is a training manual for a support trade. Can we agree that this price is a support price into an imbalance? Yes or no? Can we agree that that was imbalanced there? And can we therefore agree that this is the rebalance? Yeah? Everybody happy with that little definition? Can we also agree that it doesn't matter what we're looking at in terms of real value narratives? Makes no difference, because everything is bullish. We've got the real yields against equities are bullish. We've got the gamma line, which is bullish. We've got the credit spreads, very bullish this morning, very bullish on credit spreads. As you probably can understand, that's a very, very clear idea. And, with credit spreads becoming really bullish, that's probably because bond prices are ripping, so we've got that idea that bond prices are ripping. So we've got this clear idea that spreads are going to improve on that, aren't they? So credit spreads are really, really, really bullish equities here. So based on that idea, the key ideas that any prop desk will talk about is this idea of a held bid, what they call a hunt buy trade. And they're going to put an order in based on an unusual held bid. What is an unusual held bid? Absorption, right? It's just an absorption, for God's sake. What we want to see is we want to see a refreshed order book coming in behind that as well. Does anybody see the held bids? Does anybody see what a held bid is? Well, buy at or very near the held bid, right? Buy very near the held bid. Now, what they're saying is buy very near the hold, which is the held bid, or the hunt. So there it is there, isn't it? There's a held bid there. And there's a held bid there, isn't there? How do we know those are held bids? Because the price goes up. This one's better because the delta was still negative on that one, and the price had came off the same low price and closed at that point there. That is what a held bid looks like. So what does the instruction tell us to do? It tells us to buy at or very near the held bid. We've got to buy very near the held bid, right? So when that held bid comes in and it's now visible, we want to try and buy very near it. So you're going to buy into this area here. Because of what reason? Because the book's now gone bid. See that? We're now getting a refreshed order book behind us. You understand that? So you're getting that refreshed order book coming in behind us for that lift off that bottom edge price in line with our directional valuation of this marketplace. And it says, take a profit when the stock slows down to the upside. And they're talking about a 1.5 risk versus reward profile, which is exactly right. I mean, a 1.5 risk reward profile is exactly right for prop desks, agreed? Commercials go for 2. Prop desks go for 1.5. We've told you this before, have we not? Yes or no? Now, obviously, when it comes to 1.5, they're talking about risk to reward. So these are scalper dudes, right? These are scalper dudes. So when they're putting in a risk here and they put their stop, where do they put their stop? They put their stop literally just below that held bid. So their profit on this trade is actually 1.5 of that range, right? When we look at this on a global macro chart basis, we normally count this as a 1.0. So that's a 1.0 there. So we obviously look at that and say, well, the 912s up to the 932s is 20 points. So it's going to be 942 for a 1.5, right? 942 for a 1.5. Well, 942 is obviously just in here, isn't it? So we get that target price there for the 1.5, yeah, approximately. Make sense? And what do we not want to see? Well, you can see what we don't want to see. We don't want to see the offers held near the held bid, right? We don't want to see, for example, we don't want to see the buy coming in here, and then all of a sudden, you know, we get a green candle here that pins and pins and pins as it tries to go higher, and we get the delta coming in bid, and the candle doesn't go bid. In other words, what we want to see is as an outsized candle for not a lot of buying. Do you agree? You understand that? So if I get a candle that looks like that, and I get a delta that looks like that, we're going to be quite happy, aren't we? If I get a delta that looks like that, and I get a candle that looks like this, that's not a candle, you gullet. And I get a candle that looks a bit like this, we're not going to be very happy, are we? So we're going to recognize that this is what the kind of candle we want to see here, and this is not the candle that we want to see here. And therefore, this candle confirms we're in pretty good shape, right? On a candle by candle basis. This candle's now giving us the big thumbs up for this bit of business to be done, yeah? Make sense? And there's the trade, guys. I mean, the outcome from that trade's been brilliant, is it not? We've just gone bid at 955, guys. So that little trade is another 30 points, another massive profit. And I'm obviously going for 2-time measures on this one. So I was expecting to get into that target price. It's actually just hit my target price. So I am going to be just taking a little bit of money off that deal, guys. Crazy, isn't it? So there was the target price that we had based on this this beautiful V shape. So there's your V shape there. There's your change of behavior level there. So obviously that's where we should start to see we should see some sort of imbalance around this change of behavior, right? So we've got our change of behavior. If your charts are up to date, and I'd strongly recommend you do this, guys. I know it might seem like a pain in the rump, but if you draw your charts up to date, it keeps you in line with your thoughts, right? So there's the change of behavior. We can see the imbalance coming in at the change of behavior. That's what we want to see there. So there's the imbalance, right? So there's the imbalance coming in. So we count this as a rebalance price. But obviously, when that change of behavior extends and it goes bid, what happens below here? Well, interestingly enough, that rebalance is also exactly what we type in this area here of buyers pending, isn't it? So it's a rebalance with those buyers pending in that area, allowing us to take that trade that we've just been discussing at exactly that price against that held bid. Doesn't matter which one we take. It could be this one, or this one. But that's exactly the same trade, isn't it? Exactly the same trade at a higher print at that point. And again, we've now got a new bracket measure area here. This is on a 15-second chart, guys, if you're wondering why, it, looks a little bit different. We were looking at a 1-minute chart, but this is a 15-second chart. And now we've got a new target price on this one. The new target price, you can see for yourself, has also just been met. So we take another little bit of money out. There's your next target price right there, and you take another bit of cash off the table, guys. We told you this earlier. We told you it was buy side, didn't we? We told you, all the sellers crying their eyes out and going, this market's going to collapse, and all that massive upsides, we've just been ruined, and we're sitting there buying from them. And it's had a very, very good day so far. So here's our change of behavior here. And again, if you keep your charts up to date when it's happening, it'll be a little bit easier. Now, what I didn't see was I didn't see any imbalance in there at the point. I mean, there was a lot of imbalance as we drove, obviously. So really the whole move was imbalance. But it doesn't make any difference. We still know that it gave us a good drive. So even if we don't see that single print, we're not held by single prints. We still know that that turns into a imbalance buyer's pending area, and we're looking for that trade opportunity. You know, we're looking for that trade opportunity. And with value bullish, I mean, you go through all the values, guys, and you'll see just how bullish this market is. I mean, the only time I've sold today is that sell. So the only trade I've actually missed was this drop through the bottom edge here. I never got short there because I had already started to buy this, but we started to see the stuff getting jammed at lower prices here. And I was expecting to see this market move, which gave us this guaranteed discount price, which, if you remember, was over here. So we already had that held bid at that price from earlier on, remember? And that held bid at that price is basically like a measure of this balance anyway, which is why we got a guaranteed discount price at a held bid area. We should know this stuff here, shouldn't we? We can see this stuff, this idea of areas that are held in terms of outcomes. But we know in terms of, even before the outcomes, we know this area has been held because you can see the fast rejection of that price into a higher balance, right? The fast rejection off of that price into a higher balance gives us a held bid in here. We might not call it a held bid in terms of the technicals because we don't know what the order flow looks like there, but we can see that it's a rejection of something at that lower price. We see that that's a rejection of something at a lower price. So we know this stuff, which is why I got busy buying in here, which never worked for me, and which is why I got busy buying in here, which did work for us, and we've had a beautiful surge to the upside. We've made a lot of monies. It's not about catching everything, guys. It's about catching the good stuff. It's about reading your market and catching the good stuff. Now, let's take a look at what we've got here. Let's take a look at the concept of risk premiums. Very important concept. As you know, risk premiums are very, very good line to use. Is the risk premium bullish for equities? Why is the risk premium so bullish for equities? Why is the risk premium so bullish for equities today, guys? You should all know the answer to that. Because the bond price is losing a lot of value just now because it's going up, right? If you've got a choice of buying equities when the risk premium is rising, that's going to be a good deal, right? Because you're not getting as much bang for your buck by buying a bond, are you? So as the bond rallies, the bottom line of equities becomes more valuable to me as a trader, does it not? Is that not true? Of course it's true. If bonds are yielding zero, why would you want to own a bond? If bonds are yielding 50%, why would you want to own any equities? Why would you want to own any equities? You wouldn't, right? So when we see that that bond is running out of value because it's going so high, if I can buy discounted equities into that storyline, it's almost a given that I'm going to make some good opportunity to make some money, especially if I come into good areas. Especially if I come into good areas. So all the risk premium line that we use is a very, very straightforward. It's the S&P divided by yields. And if yields are falling, this line will go up. Right? If yields are falling and that bond's getting less valuable, this line will go higher. The risk premium line shows that there is a premium to buying equities, or a value to buying equities at discount prices. So when I zoom into this bottom edge, does anybody see it? Does anybody see the amount of value we're getting into that buy? Look at the amount of value we're getting into that bottom line, guys. It's crazy. Yep. So that's where we started to buy it, was it not? We showed you the tweet, we showed you the screenshot. Got back in again here when the risk premium went bid again. We got back in again here, got back in again here when the risk premium went bid again here. Annihilated the upside of equities. Annihilated it. Absolutely brilliant. What else? What else? Well, we know that one of the most important lines we've got on the charts just now is our gamma line, because the market is still very nervous about global situations, obviously a lot of geopolitical situations. So we want to always make sure we watch the gamma line. Was the gamma line bullish or bearish? Gamma line bullish or bearish? Well, it was bearish at first. Agreed? The gamma line was really bearish at first, which is why we sold some top edges up here. And then the gamma line went very bullish at that discount price. And the gamma line's been very bullish right through that entire move, yes? Have we told you that this is the most important line to use just now? Pretty sure we have many times over. And therefore, did you all see that diverging bottom line available to buy into? Pretty sure you did, if you've been using the line properly, of course. So with the gamma line that bullish, it's impossible not to be long at the bottom edges. I thought it was good enough to buy the bottom edges here, and I was wrong because it came in here short term, and then I had to restart my buying at that point. And the gamma line lined up perfectly with the risk premium, didn't it? With the gamma line bullish and the risk premium bullish, is there any better trade in the world? Doubt it. One of the things that we obviously talked about the other day was the idea of credit spreads. If everything's starting to look up, if the market seems to be in a really quite a bullish mood, I like to double check the risk premium. No, not the risk premiums. I like to check the credit spreads. And if you look at the credit spreads, this is HYG divided by ZN, just looking at the difference between the high yield market and the 10s, which is something we covered again just the other day. And if I look at the credit spreads market, was it bullish or bearish today? And yes, we did cover this just the other day as well, remember, guys. So this is something you should have been looking at today to get that read. So again, it's the stuff you should have been covering. It's the stuff you should have been looking at. It's the stuff we covered in classroom the other day. We talked about the credit spreads market, which says at the moment you should be very mindful of the credit spreads, because the credit spreads are now showing that element of risk coming back into the markets, that element of risk on narrative coming back in. We want to see the credit spreads looking good. So when we look at the credit spreads coming in, and that credit spread is narrowing, if this line's going up, HYGZN line is going up, that means that the credit spread is narrowing. Yes? So if the credit spread's narrowing, that's bullish equities, because the difference between risk and risk-free is very small. That's good news. That's a good sign. That's a good sign. In other words, the buyers of risk aren't getting a massive premium because it's not that risky. If they're getting a massive premium, it's very risky, because why would you get a massive premium? Nobody wants it, right? Nobody wants risk, right? Nobody wants risk, so you're getting a massive premium. This line will be straight sell side, which means that we should be sell side equities as well. So we know that this line is very, very, very powerful. So when we look at the totality of all of this information, And we can also recognize that when we look at the NASDAQ S&P as well, we can see that the NASDAQ S&P is a little bit troublesome. You can see in the early stages that we actually saw a bit of divergence here, but the NASDAQ just not finding the bid at the moment. And that's quite surprising, which means that the NASDAQ is still, remember, this is NASDAQ S&P. But it means that the NASDAQ is so heavily discounted against the S&P that this is the only place I want to be doing trading at the moment. Because the NASDAQ is at a massive discount to the S&P right through this entire phase. People are still buying quality, in other words. So if they're still buying quality, we need to understand that they're still buying quality. So we're getting these massive discounts, even on a rallying phase here. We're still getting massive discounts on the NASDAQ S&P phase. So, brilliant day. The only trade today that I haven't taken part in is that drop. And you know what? I can live with that. I can live with that. And I bought up the bottom edge, basically bottom tick priced the bottom edge there, guys, today, and a sensation. Absolutely a sensation. And you'll see that we did bottom tick, pretty much bottom tick the price. There's the screenshot for yourself there. You'll see we bought in there. 874.75, guys. 874.75. You look back in hindsight to that chart at 874.75, and you'll see just how good that price was. 874.75 was right there, guys. It's a $2,000 upside. $2,000.